Hello, other students. How are you? I hope you are fine wherever you are. It's Jerry Tumkulu, the Acca tutor from Transcal Consulting Services or Transcal Business School. In this video, we are going to look at a question related to self-employment. It is relevant to those attempting the Acca taxation UK paper. Yes, the United Kingdom tax variant. All right. So for those who feel like they want to get in touch with me for further coaching, I'm available 24/7 on +263 774 596 368. That's my number. You can WhatsApp or call directly. Anyway, we have got a question which we have modified from the original version, okay, relating to a lady by the name Takila. All right, so the question has got 3 requirements. The examiner is going to tell you in every paper, and this one was a section C type. Section C type question, a 15 marker. All right, so let us read the scenario. Takila commenced self-employment on 1 September 2024, preparing a first account for the 8-month period ended 30 April 2025. All right. Takila is elected to use the accrual basis for her self-employment income. All right, so she wants to use the accrual basis, but we are going to be led by the taxman on how to account for Takila's business transactions the tax way. All right. One thing I want you guys to take note is the importance of dates. When the examiner gives you some dates in the question, he expects you to make use of them. All right. So, for example, we are told that these accounts are for an 8-month period, which ended 30 April 2025. But we all know that the UK tax year ends. It ends on the 5th of April. Right? So it starts from the 6th of April to the 5th of April the next year. Right? So for the 2024-2025 tax year, the year started on the 6th of April 2024 and ended on the 5th of April 2025. Okay? So this means that the 8-month period falls within the 2 years. Within the 2 tax years or 2 fiscal years. All right? So the 7-month ended on the 5th of April 2025, the first 7 months, and the last month, the 8th month, fell on the 2025-2026 tax year. So which means you need to have some 7/8, 1/8 type of thing. All right? Good. Now, before we read further, it is wiser to go through the question requirements to understand what is being asked of us. You are required to calculate Takila's tax-adjusted trading profit for self-employment business. Okay, in brackets, for self-employment business. The examiner always does this to ensure that students get straight to the requirement at hand or to the requirement in issue. Not everything will be required at every requirement. Sometimes the examiner will be specific. We want you to calculate the tax-adjusted trading profit for self-employment only on this part. For the 8-month period ended 30 April 2025. 2025 for the 8-month period ended 30 April 2025. So which means here you are required to do for the 8 months. All right? For the 8 months. Not 7 months, but for the 8-month period. Okay. Don't worry, we'll reach there. The examiner is not confused. All right? I'm sure you're worried that, oh, but the tax year has ended in 7 months. Why then are you saying that, or why then is the examiner saying that we need to compute the tax adjusted trading profit for 8 months? Yes, the examiner wants you to compute the 8 months inclusive, okay? The 8 months, which is the income for the period of trade so far, okay? In terms of the accounting year, all right? Remember, there is this requirement on B where the examiner specifically now wants you to compute the assessable income, all right? So here you are required to compute the amount of trading profits from self-employment that will be assessed on Tequila for the tax years 2024, 2025, and 2025, 2026. Here, remember, it's 7 months. Okay, she was in trade 7 months. For 8 months, but the applicable months for this particular year was 7/8. And for the 2025, let me try to, okay. For the 2025 tax year, 2025, 2026 tax year, we have got 2 periods there. Okay, we have got 2, fractions which are applicable. The first one, remember, there was the first month of that particular period, which was part of the 8 months, the 8 months of initial trade. So there was a 1/8, which means the first month, the first April for that particular year was part of, in terms of accounting, from the accounting perspective, she has been trading for 8 months. However, we have decimated, or we have dissected that period because of the fiscal year issues. Remember, individuals are assessed, their income is assessed in terms of the fiscal year, which we said starts from the 6th of April up to the 5th of April in the following year. All right? So this is why we ended up dividing the period between the 7 months and the other months. All right? So the remaining months was 1/8, and which means we are left now with 11 months. So we then have to say plus 11/12 of the income, isn't it? Good. You just have to have the rough idea, as you would be then required to play with the figures. Now, don't worry, we'll do the question and you'll see what we have been doing there. Now, for part A, there is also this note which you need to take care of. Whenever the examiner wants you to compute the tax adjusted trading profit or similar figures, he will include some notes, some additional note, which you should always read. For this particular question, the note was saying, your computation should commence with the net profit figure of 51,260, indicating by the use of 0 any items that do not require adjustment. So if an item doesn't require any adjustment from the figures you are given, if an item doesn't require adjustment, do not ignore that item, but you are required to write the item and simply put a 0 to indicate to the examiner that you were aware of the issue, but no adjustment was necessary. Okay? If you simply ignore and say, oh, yeah, it was a 0, so let me just ignore, you are bound to fail. you are exposing yourself to failure. All right, avoid such mistakes. Sometimes there won't be any need for sure to write anything. In those cases, you simply have to ignore and move on with your life. Anyway, let's get back to the scenario. So, let's look at the self-employment data. Paragraph 1. Taxable statement of profit or loss for the 8 months period ended 3rd April is as follows. So we are given the P&L, okay, the P&L information, the profit or loss, right, and there is income there, all right, and it is on this income that we then have to worry about taxes, all right, but we then have to ask ourselves, from the income, are there expenses we need to deduct, all right? Then, when it comes to the expenses, there are certain expenses which are prohibited and some allowable, okay? Or some not allowable, some allowable, right? So, the first expense we are given is depreciation. And we know at this level that depreciation is not allowable, okay? But we are told that the accountant, when arriving at the figure there, which we are required to use, remember the note here, the note was saying we need to use that figure when we do our computation, okay? Here, the examiner is saying use this particular figure, 51,260, and that's where the figure emanated from. It emanated from this table, okay? So when we do our computation, we need to start from the net profit of 51,260. But we can see that when the accountant arrived at this particular figure, he had deducted depreciation. Usually accountants deduct depreciation. That's the accounting rules, isn't it? That's the accounting rule. So that's what they did here. Tequila was not an exception. As an accountant, she deducted depreciation from her income. But in the eyes of the taxman, that's not allowed. Okay? So if it is not allowed, what do? We need to add back. Remember, we are doing for the whole 8 months. No need for adjustment so far. Okay? Ignore the adjustment. You need to be alert when you are answering exam questions, because a lot of students will then adjust for the 7 months and so forth. It's not yet required. The examiner explicitly said that you are going to prepare for the 8 months. Okay, you need to compute the tax adjusted trading profit for self-employment business for the 8-month period, not 7 months, 8 months. Okay, be careful there, be careful. You are entering the examination, and I don't want you guys to come out and say, but the tutor ate our money. Yes, I chopped that money. So you need to open your ears, okay? You need to open your ears. Pay very careful attention. Now, so we have dealt with depreciation. Let's move on. Car expenses. Car expenses totaled 2,600, but before we take them as allowable, we need to refer to note number 2. Those notes given by the examiners are not to be ignored in the exam. Okay, do not ignore those notes, because you might find yourselves in trouble. So what is the note saying? The note is saying Tequila's car expenses during the 8-month period ended 3 April. No, the period doesn't end on 3 April. That's a typing error. We are sorry for that. That's a typo. The period ended on 3rd April 2025. So this is a 30. We are sorry for that. Okay. So the expenses included insurance, fuel, servicing, which totaled 2,600 as reported in the statement of profit or loss. She drove a total of 7,500 miles, of which 1,500 were for private journeys. Remember, we are still doing for the 8-month period, so do not prorate by months. Okay, do not multiply by 7/8, at least at this particular juncture. Okay, the examiner doesn't want you to prorate, so you just have to prorate only based on the number of miles traveled. So private journeys for individual, for business, for individuals, or businesses of individuals, you are not required to deduct expenses on private journeys. So the accountant simply deducted the full 2,600, ignoring the fact that some of the costs were related or were attributable to private journeys. So let us remove, or when I say remove from expenses, I'm simply saying you need to add back. Okay, but you are adding back to income so that such private journeys are taxed. Are we together? So let us compute the private journeys. That's the total cost was 2,600 multiplied by the private journeys divided by the total journeys. The total mileage, and you get your answer. That answer should be added back. Okay, so you need to tell the examiner car expenses not allowed, in bracket private journeys. You then do your computation on Excel, 2,600 multiplied by 1,500 divided by 7,500, and you put a positive figure, not a negative figure. You put a positive figure to tell the examiner that, hey man, that should be added back, that should be taxed. Is that clear, ladies and gentlemen? That should be taxed. We are done. We are done on that. Let's move on. During June 2024, Tequila incurred advertising expenditure to promote a new business of 1,108. So we are told that during June, this lady incurred some expenses, but remember, we are told in the introduction that she commenced business on the 1st of September. So the June expenses, the advertising expenses, were pre-business, pre-operation expenses. Okay? So the pre-operation expenses, those ones, if they were done to enable the operations, they are allowed, okay? They are allowable deduction, they are allowable expenses in the eyes of the taxman. They are considered expenses for the first year of trade. So you need to let them be, all right? So the examiner is saying these expenses have not been deducted in computing this figure, or in arriving at this particular figure. Those expenses were not included. So what you have to do, you then have to say advertising expenses as a new entry, and you then have to put a negative figure of 1,800 to recognize them for tax purposes, isn't it? Good. And obviously, the accountants should have as well included them in their records. Okay. Yeah. Yes, because we cannot capitalize such type of costs. Okay, I stated specifically says that those pre-trade advertising expenses and so forth should be expensed as incurred. All right, they should be expensed as incurred. So obviously, since they were ignored on that statement of profit or loss in the accounting books as well, they should have been taken care of. Anyway, this is not accounting. We are doing taxation. All right, let's move on. Taxable purchased the following vehicles on 1 September 2024. All right, so delivery van, 13,900, CO2 emission rate, 148 grams per kilo, 148 grams per kilo. Now, what comes to your head when you see things like this? Obvious, the aspect of capital allowances. Okay, and businesses are allowed what is called an annual investment allowance of up to $1 million. Pounds. So, you then have to ask yourself, is the particular asset in question, allowable? Okay, is it a qualifying asset for the allowance? All right, is it a qualifying asset? So for delivery vans, these are considered equipment for the business and they do qualify. And in this case, the emission is irrelevant. This information is irrelevant. So which means the full 100% of the expense has to be considered. It is going to be covered by this particular allowance. All right. So a full capital allowance of £13,900 is going to be enjoyed. What about the car? The car. Okay, now the car, we are told that the car C02 above is used by Tequila. So this is the car that is being used to run business errands as well as the private journeys of Tequila. So this could be a car which is in the main pool. Okay, can be categorized as a main pool asset. All right, so let us go to the tax tables and see how we can treat this particular car. So, cars, okay, this is the information which could be relevant for cars. All right, so here the emission rates are relevant, so we need to then look at the emission rates for this particular car. We are told that it emits 44 grams of CO2 per kilometer. So we come to our tax table and look for that car. So CO2 emissions between 1 and 50 grams per kilometer, the rate that applies there is 18%, which is actually synonymous with the main pool rate. Okay, so 18% is the rate we are going to use, ladies and gentlemen, as we do our computation to determine how much capital allowance should be awarded to this particular car. pages. So that's 18% multiplied by 11,500 multiplied by the business allowance, the business part of the expenditure, the business part that's we are told that they traveled 1,500 for private journeys, but the remainder, that's 7,500 minus 1.5, we come to 6,000. So 6,000 miles over 7,500. These are the business trips. All right. Okay, but now the 18%, ladies and gentlemen, from the tax tables, these are annual rates. These are annual percentages. So this, in Takila's case, they were not, the business was not in operation for the full 12 months. It was only in operation for 8 months. So we need then to prorate accordingly. So we then have to say multiplied by 8 over 12. And you get the allowance that Takila should enjoy. Then there is information about Takila's forecast tax adjusted profit for the year 3rd April 2026, which was how much? 84,000. That information is relevant when we attempt part B of the scenario. So we can put that one on hold, and I think the self-employment income is finished. Okay, we are done. So let us then try to populate this information on Excel and see what then has to be done. So I think I've done much of that work for you guys, all right, because you're wonderful people. Wonderful people should be treated nicely. Okay, I can just put my face there. Okay, so in terms, in accordance with the instructions of the examiner, I'm sure we did justice to the question. Okay, this face of mine is just troublesome. Okay, so the question wanted us to start with the net profit, as you can see there, and the figure of the net profit was that one. It's taken from the question. All right, depreciation, we've added back depreciation. This is the depreciation, 1,700, because here you have seen that the examiner wanted us to do this. Okay, the accountant had deducted the 1,700, but we said that was wrong, and this is why we have put the 1,700 there in as a positive figure, which means it has to be added back to the net profit. Then on the motor vehicle expenses, we say that part of the expenses was private. So we need to add back the private. As you have seen here, we have said that we need to then multiply the 2,600 by 1,500, which was the mileage for private journeys over the total journeys traveled, or over the total mileage. Okay, and we determined the 520. Okay, the 520 there, and that 520 has to be added back. Then the advertising expense, we talked about that sometime earlier on, and we said that this was the advertising expense was pre-trade pre-trade, and allowable. So we write it in full, the £1,180 as a negative figure there. Then we come to the favorite section for students. My students love capital allowances. So the computations, like I said, this one, the delivery van, the full AIA. Okay, remember, like I said, this was a 1 million. Businesses are given £1 million for the full 12 months. So here it's 8 months. 8 months multiplied by 1 million. You can see, 8 over 12 multiplied by 1 million. It's around 660 thousand. So which means the 13,000 could be taken in full. 13,900, the 100% of it. All right, and then here, which was the main pool assets, right? And we take the amount as given in the question. Okay, the information about the delivery van, sorry, not only the delivery van. Where is the eraser? Good. Okay. The car, like I said, the total cost was 11,500, but the capital allowance for that particular asset was 11,500 multiplied by the 18%, and 18% was obtained after we used the CO2 emission rate, which was 44 grams per kilometer, which is between 1 and 50 grams according to our tax tables. All right, and that gave us the 18%. All right, then we multiply that one by 8 over 12. Why? Because the business or the asset was in business for 8 months only. All right, and then it was used for business for 6,000 miles over the total mileage of 7,500, and then we arrive at that amount. So we do our computation, right? We do our computation, and we then come to the sum of £37,296. That's the tax adjusted profit. Ladies and gentlemen, you start with the net profit, do your adjustments, and then you arrive at the particular. Do not forget these animals, the capital allowances. Do not forget them in your computations. It annoys examiners. Yes, it infuriates them. So do not forget those things. Now, part B was saying that we need to compute Takila's trading profit. Okay, Takila's trading profit should be based, ladies and gentlemen, this should be. Now, in the examination for the 2024-2025 year, you would have computed your tax adjusted profit for the particular year, that is the 2024-2025 year. This was the year. This was for the, remember when we are saying for the period ended 30 April 2025, all right? This period included the 2024-2025 year and the 2025-2026 year. All right. Why am I saying it included both? Remember, I said our tax year, the UK tax year, starts on the 6th of April and ends on the 5th of April the next year or the following year. All right. So when when the accounting year ends on 30 April 2025, it means the first 7 months up to 31 March were from the 2024-2025 year. And then the current April was for the 2025-2026 year. So the question for part B is saying, sorry, what's happening? Okay. Is it not moving? Okay, so part B is saying calculate the amount of trading profits from self-employment that will be assessed on Tequila for the tax years 2024 and 2025. So for 2024, 2025, we have done the tax adjusted profit. So what we then need is just to play around with the applicable fraction. And in this case, like I said, for the 2024-2025, only 7 months are included, 7 over 8 months. Remember, this business was in trade for only 8 months. But for the year 2024 to 2025, only 7 months were applicable. So this is why we are going to say trading profit, that's 37,296, which is the figure we found on part A there. Okay? 37,296 multiplied by the fraction, that is 7 over 8. Why? Because we are saying the only months which are applicable for this particular period were only 7 months. So 7 over how many months in trade? Over 8 months. So 7 over 8 were applicable, multiplied by the tax adjusted profit. And this is the formula we are looking at. Is that clear, ladies and gentlemen? Good. And our answer became 32,634. And we earn our 1 mark. Then we move on. For the 2025-2026 year, remember we did the computation here. I said, since this one went for or was used up for the 2024-2025 year, then this one should be, okay, this part should be applicable for the 2025-2026 year. All right? So you then have to know which of these fractions, which figures these fractions should be applied to. Obviously, the 1 over 8 was relating to the 8 month period, and the 8 month period had an adjusted profit of 37,296. So you just have to multiply the fraction to that figure, right? And then for the remainder of the year, of the 2025-2026 year, the 11 months will then have to be adjusted to the figure, which was, we were told by the examiner that Takila's forecast tax adjusted profit for the year ended 3rd April 2026 is 84,000. So that's why we are multiplying the 11 months. Why 11 months? Because the 1st April, or the month of April, was belonging to the 8 months, right, of the prior period, right? So although this April was in the 2025-2026 tax year, it has already been taken care of when we adjusted the, the tax adjusted profit on part A with it. Remember, we adjusted with the fraction here. What's going on? Okay, there was that information there. When we computed this figure, you can see that the 37,296 was adjusted by the fraction 1/8. You saw it, right? Now, that means the 84,000 should then be adjusted by 11/12, which represents the remaining 11 months, right? And that's how we obtained the 77,000 there. So after doing that, you then have to add it to the 4,662 and you obtain your 81,662. I'm sure it's clear, ladies and gentlemen. Okay, that's great. Now, all right, so that's the last part, the part C. Let us see what C was all about. Part C. Part C is the most common one. Calculate Tequila's taxable income for the tax year 2024-2025. So here now, we are then required to show our expedience when it comes to the computation of tax, and here we are required to earn much of the maths in this part. Okay, so taxable income, ladies and gentlemen, remember this one is an individual in trade. So for individuals, your task is very simple. We know, and we should be knowing this. There is no defense, there is no excuse. All right, so for individuals, we start with the non-savings, savings, and then dividend. Remember that table which we normally use. And then after that, we then move on to the personal allowances, and we are done. Is that clear? When you are computing taxable income of individuals, right? So this is the same thing which we did here, right? But let us just first read the rest of the question, because there's a lot of issues which we did not discuss. So carrying on from where we left, we were at a rental property. Tequila lets out a rental property which she has owned for a number of years. During the tax year 2024-2025, the rent due was 8,640. However, the tenant did not pay the March 2025 rent of £720 until May 2025. So, you need to understand these things. For individuals, rental income is on cash basis. But for companies, rental income is on accrual basis. So what does it mean on a cash basis? It simply means that if on a particular month, even if the rent was due, but the taxpayer was not given that rent, therefore the taxman is not going to charge on that particular non-paid rent. But if it is for corporations, they will be charged. Okay, so that's the cash basis of accounting. So for rental purposes, so we are told that the March rent 720 was not, okay, was not paid until May 2025. So which means we need to deduct, okay, we need to deduct the 720, right? The 720 has to be deducted because it is cash which was not received. I hope my screen is clear as you guys right. Let me try to enlarge the screen because you guys, some of you have got short eyesight. Yeah, I have to be as inclusive as possible. Okay, so the 720, the 720 pounds should be deducted. Then number two, the expenditure on this property for the tax year 2024-2025 was as follows. Agents fees and insurance, 1,000, right? So agents fees and insurance, this one is allowable, isn't it? Allowable. Allowable. Those are allowable expenses. So the deductions are fine, right? All right. So if they were not taken care of by the accountant, so it means that, it means that you need to deduct them. But if the accountant has already deducted them, then you just simply have to put a zero. Replacement washing machines, 500 pounds. The new washing machine is the same model as the one it replaced. So we are talking of the replacement washing machine. If the replacement was the same as the original machine, if there were no signs of improvement, then the expense was an operational expense. Was it an expense for improvement or an expense of a capital nature? In that case, the expense would be allowable. So in this case, the new washing machine is the same model as the one it replaced, so which means this one again is allowable. Are we together, ladies and gentlemen? Only improvements are considered expenses of a capital nature and therefore attract, if the asset is a qualifying asset, they attract some capital allowances and so forth, but the expenses themselves are not going to be allowable. But in this case, the replacement was of the same model and so forth, so there was no improvement, so there was no capital expense, and therefore the expenses are allowable. Am I talking to somebody? Can somebody shout hallelujah? Okay, now a replacement dishwasher, 490 pounds. The dishwasher was an upgraded version of the one it replaced. Had the replacement been of the same model as the old dishwasher, it would have cost 390. All right. So the allowable is up to the original or the old dishwasher. Right. Excuse me. The excess, that is 490 minus 390 is disallowed. So if the accountant had deducted the excess, we need to add that excess back. Is that clear? Great. Let's move on to the guilds, the government securities. UK government securities guilds. On 1 December 2024, Taxable purchased £1,200 nominal value of gilts, paying interest at the rate of 2% per annum. Interest is paid half yearly on 31 October and 30 April. Taxable sold the gilts on 31 March 2025 for £12,080. So a clever student should have seen that this was a typo. Okay, this was a typo. Normally, the gilts, okay, UK gilts or government securities do not vary that much between the nominal and the current value or market value. All right, so usually they will be almost the same. The premium is not that much. So this should be £12,000 nominal, not 1,200. Okay. Now, these guys have sold. Okay, they have sold the notes to other people. All right. So we need to then tax them. Right? We tax them on that transaction. All right. And the interest, we are not taxing them on the sale of the principal value, but on the interest income. Okay? So that's the thing, isn't it? So let us compute the interest income, or the interest payable. All right? Okay? So the rate is 2% on the nominal value. The nominal value is 12,000 multiplied by the duration, okay, or the tenure of the loan notes, the tenure of the securities. They purchased the securities that is on the 1st of December, okay, on the 1st of December, and they sold them on the 31st of March. So we are talking of how many months? We are talking of 4 months. 4 months. So we get the amount that has to be taxed, the amount of income, of interest income to be taxed. We are done. We get our figure there. Then let's read the paragraph about joint income. During the tax year 2024-2025, this is a typo, okay? Not 29-25. It's 2025. Taxable and her husband received total savings income of 460 from a deposit account which is in their joint names. So joint income is shared equally, 50-50, isn't it? Good. So if we receive savings income from a joint account, so it means in the hands of Taxable we need to tax how much? 460 over 2, which means 230 has to be taxed in her hands. Okay, joint income. There should be an entry of joint savings income of 230, which has to be added to a taxable income, isn't it? Good. Takila and her husband also jointly rent out one furnished room of their main residence. During the tax year 2024-2025, the couple received 8,600 without incurring any allowable expenditure. Okay, so they were renting out one single room, which was furnished. And if you are letting out a room from your main residence, there is a relief which is known as the rent a room relief, which is about 7,500 pounds. So this income should be reduced by the 7,500. So the 8,000 has to be has to be reduced by 7,500. Okay, and the benefit, the remainder, actually the remainder should then have to be divided by 2. Okay, as text, because the excess should be the excess is the one to be taxed, isn't it? The excess should be taxed. So that excess is not wholly going to be taxed in the hands of Takila, because this is a jointly owned investment. It's a jointly owned room, right? So even the husband, in the hands of the husband, the excess is to be taxed. So we are only looking at the part which Takila has to be taxed upon, which is the excess divided by 2. Isn't it? Good. So let me show you how I did it. Okay, so we are on part C, ladies and gentlemen, on part C. Let us go step by step from the rental property. Of course, the trading profit is the one which we computed on part B. Remember, this is the part B. The figure which is relevant there is this, the one which has been adjusted from part A by the 7/8 by the 7 months period. Remember, okay. So that's the amount we are still using. So we then move on to part C, where we're saying we are taking the same figure, which is this one, as our trading profit. Remember, part C wants to tax all the incomes related to this particular lady. Okay, she's into trade. Okay, the self-employment business she was doing from part A. Then we need to tax her property income. Remember, we are still following our normal table, the non-savings. This is non-savings. This is non-savings income. Okay, the non-savings income. Then we go to savings income, where we talk of the guilds and those joint deposits account, right? So the trading income, we've done that one. Property income, there was this whole paragraph about property income, and let us deal with that one by one. We are told that they received 8,640 from a tenant. Okay, the amount which was due was 8,640. However, they did not receive 720. So this is why we are saying the 720 has to be, the 720, the 720 is to be deducted. Why? Because we are operating on a cash basis, and if I'm not paid that money, then the taxman has no right to levy tax on me. So this is why we've reduced that one by 720. Then we say that certain expenses are allowable. For example, the agent fees and insurance. Okay, we deduct that one from the question there. Then a replacement washing machine, we reduce the 500. Why 500? Because the replacement was the same as the old one, which was replaced. The new machine was worth 500 pounds, the same as the old one, which was replaced. So that expense is allowable. However, the dishwasher, all right, the dishwasher, the replacement was 490, okay, which was an upgrade from the old version, which was costing 390. So we are saying only 390 is allowable. The remainder is not. The excess is not an allowable expense. So in this case, you just have to write the allowable portion. The allowable portion of 390. Okay, but if the accountants had already done their computations and included the full 490 in their deductions, we will then have to add back the difference. But in this case, this is not. This was not the case. The accountant did not do anything. So this is why we are only deducting. We are only deducting the expense that is allowable, the 390. Get me right there. So you do your computations and you obtain the sum. This is the sum, and then you have to apply the rent a room relief. Rent a room relief, which I said this is the difference, the excess divided by 2. So in the hands of tequila, we are only going to tax 550, and the total property income comes to 6,508, and this is the same figure we are going to use here, 6,580 as property income figure. All right, then we are done with the non-savings income. We then have to move on to the guilds, which are savings. Okay, the guilds are in their investments, isn't it? That's income from investment. Guilds are government securities. Okay, so when we buy a security, that's an investment. All right, we earn some money from that. Okay, in other words, they had loaned the government. They loaned the government. Okay, by purchasing the security, you are giving some certificates from the government, right? Then you give it money. You give the government 12,000 pounds. They give you some security, but you start to earn some interest. This was the issue here. You start to earn some interest. That interest is interest income. So we charge you. Okay, we charge you when you decide to dispose of that. We then say, okay, fine. From the time you invested, that was 4 months, isn't it? 4 months, and you were earning 2% on your investment. So that interest income, we are going to charge you. So 12,000 nominal value multiplied by 2% multiplied by 4 over 12, that's 80 pounds, isn't it? Then the joint deposit account, they were owning a joint deposit account, and 460 was was the income from that account. So since it was a joint account, we then have to say they have to share the income 50-50, and so 460 over 2, that's 230, which is going to be taxed in the hands of Tequila. Then every year, these guys, they are entitled to a personal allowance to the tune of 12,570, which is bound to reduce their taxable income. Okay. And we are left with only 26,954. That's the taxable income, ladies and gentlemen. So I hope this video has made some sense in our heads. Let me just try to zoom in. This is the presentation, ladies and gentlemen. The Tequila, Tequila workings. So this is the issue with that's the part B, the part C, the workings, property income. Okay, guys. Sorry, I was making a lot of explanations, so the video has become too long. Okay. Sorry for that. And this was the question. Just for those who want to take, some screenshot. Okay, guys, I hope you enjoyed the presentation. Let me know in the comment section if there was an area I did not tackle properly. We also learn every day. Sorry, that was. So guys, I want to do another question, this time on corporation tax. It's a modification again, but I hope you enjoyed. See you in that video. Thank you.